Here we are, just entering the second quarter of the year. The first quarter just flew by. We talked about at the beginning of the year some big investment themes that were impactful for the 2021 stock market and economy. I'd like to go back and do a first quarter recap because not only will it help us to understand where we are, but also I think that a number of these call them predictions or looks ahead are yet to be completed. So we can look further down the road and see how we're doing, keep track of where we are and where we're headed. So the cartoon here, I think, really speaks to the current environment because you can see here this Wall Street type is leading the parade with a stock market boom that is well ahead of the national prosperity or the economy. And this is typically the way it happens, is that you have the stock market will have a sharp liftoff. This is exactly what happened in March of 2020. It started a near vertical ascent, saying or telling us, predicting that later on there would come a boom in the national economy. In fact, that's just what's happening. The second and third quarter are likely to have really eye-popping GDP numbers. We're already seeing employment numbers getting much better. CPI numbers are quite high, and we can expect that the economy is going to catch up with the vertical ascent of the stock market. This happens all the time, over and over again. Something important happens, the economy starts to really take off, and it has an effect on the trajectory of the stock market. The stock market doesn't go up at that near vertical pace anymore. Let's talk a little bit about that. So this cartoon is very apropos. Here comes the national prosperity ahead of us. Hello, I'm Bruce Frazier. I'm your host, and this is Power Charting. So we have an important announcement. Very briefly, Roman is starting his new Wyckoff teaching cycle for the summer on April 19th. He will have a free session. Always the first session is free. It's a terrific course if you want to sharpen or start developing your Wyckoff skills. Roman and I hold a weekly Wyckoff Market Discussion. Our April 21st session is going to be complimentary. Go to the description below this video on YouTube. I will have links to get into these two events absolutely free. Sign up and join us. Okay, here we go. We have a lot to do. This chart was put up actually in November, but we had been keeping point and figure counts on the accumulation structure of the COVID low, this V bottom low, and you can see this incredible ascent that occurred thereafter. Now, keep in mind, this is just through November, but this count across here, this horizontal count, gave us a rather wide objective range. But at the time, here the count line is at 2780 and the low is at 2200. And so it's a rather wide, deep V bottom, but nonetheless, and there was smaller accumulations down here that we were counting and keeping track of early in the year. And we talked about those in the Wyckoff Market Discussion, and I talked about them here on Power Charting. Well, notice what's happened. Here we are, we're at 4160 is the high objective count on this range up here, and look where we hit today on April 16th. I guess this is April 15th, and you will be watching it on the 16th, but it just popped above the high objective of this range at 4160, now 4170, 42. So here we are, we have additional counts I'll show you in a minute. So very important count that was developed early in 2020, reiterated at the end of the year. And here we go. So here's the NASDAQ composite 1978 to present. I basically showed, this was originally published in October. I reiterated this at the end of the year, but you can see IPO booms. All these booms I lived through as a professional in the industry. They were all exceedingly interesting and unique in their own way. Here we are, we're in this boom now. And at the time, and this slide is actually out of an earlier presentation that I did early in the year, IPO booms tend to arrive at the conclusion of a growth stock leadership trend. This boom appears not to be over, but this is a late stage advance. And in fact, it did go higher. And you can see here that at the time we were at 11,863.90, and as of today, 14,032. So we've continued to work higher in the NASDAQ comp, and there has been a continuation of the boom, the SPAC boom, and so on, but things are starting to cool off a bit, I would say. Time will tell whether this in fact is the end, but there's some other things that we can look at that will help us to understand where we are in the growth versus value relationship. This chart goes back to 2014, and it's a comparison, it's a relative strength chart of value stocks as measured by this is the Vanguard Value ETF, to the triple Qs, which is a really large cap growth. And growth has been dominant here since the early part, really for almost 10, 11 years now. And in fact, you can see that this was a booming period up into the 83 IPO boom, which lasted, that boom lasted 7 or 8 years. This boom lasted a long time. And this boom, maybe the longest of all, lasted from around 2011, where growth was dominant. Here we can see, and back in September, I published this chart, and you can see that there was an important throw under an oversold condition in this long-term relationship using Wyckoffian analysis on trends, which has given us really a spot on view because we became oversold, built a base, and now returned back in, which means that this rising line says that value is starting to rotate back into favor. And so that was the theme we made at the time. And so if we have a chance, we'll go back and zoom into this, but this is a beautiful Wyckoff base. I've shown it to you in the past. The main thing to keep in mind is that we're starting to see rotation back into the real economy stocks, which are generally considered to be the value stocks. We talked about 3 presidential cycles because 2020 was a presidential election year. And this, I think, could be very impactful or important to what happens in 2021. And I'll show you why in a second. 1960, John F. Kennedy was elected. He beat the other party, Richard Nixon. 1980, Reagan beat Carter. Change of party. 2000, Bush defeats Gore. Change of party. And in each one of these cases, we had in the 2-year, the 1 year of the decennial pattern, we had a top, and we had, so to speak, really a larger top back here. And this was the IPO boom, actually. And so this was the end of the IPO boom. So you can see here that in the 2-year, which is next year, we can see that in 1960, a very important low was put into place mid-62. A very important low was put into place middle of the year 1980. These were cyclic bear markets. And in the middle of 2002, there was an important low that was put into place around the end of the 3rd quarter. And so the question becomes, because there were changes of parties, changes of presidents, that there's a change of emphasis in each of these parties as there's a change of administration. Could that happen again here? I leave that up to you, but keep in mind that all of these decade-ending elections all had influence on what happened into the 2-year of the decennial pattern. So here, in fact, is the decennial pattern. And so I just put up the 1980 to 90 period so you can see the incredible relationship, family resemblance here. Here's the 87 crash. Here is the 82 low, which we just looked at. Here, you know, and I've done these slides on every decade, but I just wanted to show you this so you could see. Here we are in the 1 year and the 0 year, right here, and right here you can see that we in the first quarter had a good rally, and I'm going to show you the first quarter here in a minute. This of 2021. And so then there's a mid-year high, and you can see something akin to a distributional top, and it leads into a decline, which is a cyclic bear market, typically in the 3 examples we just looked at, with a final low made in the middle of the second year. And that's pretty much what happened in 60, 80, and 2000. Could it happen in 2021? And thank you to Seasonax for graciously allowing me to use their decennial charts. And this is data is 1897 to 2015. These are not their opinions, they're my opinions. They are just very kind to let me use their research. So thank you very much. Now this isn't intended to be lined up, but here is 2021. Here's the first quarter right here. So you can see the first quarter, and here's the beginning of the second quarter, and there's generally an upward tilt. This is the S&P. So there's a rising trend, and here is a yellow shaded box here, which this yellow shaded box represents around the first quarter. And you can see somewhere out here, it looks like in the second quarter, you typically get some kind of a peak and then distribution. That doesn't mean we have to get a peak in the second quarter. Doesn't mean we have to get a peak at all. It might just keep going up all through the rest of the year. This market has been incredible, but we're going to use our Wyckoff tape reading sensibilities to study this market. Stay tuned to power charting. Join us at the Wyckoff Market Discussions, because we will track this very closely through the year and look for the telltale signs of a market that wants to go into distribution. And so we will be watching this, but in the meantime, the trend is up, and we will continue to go with that. Why do we say the trend is up? Well, here is a chart that we put up in the beginning of the year. This is January 4th. And this chart was put up in Wyckoff Market Discussion and also with power charting. And here is the count area back here in 2020. This is the COVID accumulation count. Look how beautiful this is. This work was done by Roman. And so at the time, this count line is an amazing 7,300 with around a 6,800 low. And this count goes up to a whopping 15,400 to 16,100. And at the time, there was really general disbelief that that was even possible. I mean, that was, you know, effectively more than a double of the count line. And then a reaccumulation count starts in September, August, September, and this count, which goes into October, counts up to, get this, a reaccumulation confirming count here. And this reaccumulation confirming count goes 15,800 to 16,700, confirming the lower accumulation count. Well, and this is in the area of around 11,600 count line and around a 10,600, slightly below that, low. Now look where we are, 14,015.25. So we're just grinding our way up there. So this really does suggest that there could be and should be higher prices ahead as this market works its way into further highs. And just because a count gets fulfilled, we want to remember that a count can get fulfilled and then potentially build a new count for even higher prices. So we don't rule out the possibility, the probability of the trend continuing. So here, this is zooming into a smaller time period. This is the reaccumulation count right here that we just looked at. Here is a count in March. Now, this is 4-hour triple Q data, so it's intraday data, and look at this beautiful accumulation structure right here. And so this accumulation results in a launch up to the top of the range here where there was a climactic surge up to this trend line, and then a very sharp change of character decline called an automatic reaction. Range bound, built a cause. This cause starts to make a series, makes higher lows. Now, what does this count? So we did an intraday count. This is 30-minute data. This count we've taken in two segments. The first count goes 349 to 360. Now, this count was taken in early April, but it goes back. The count actually goes back to February. So that's, and you can see that here. This is February, and then this is into the end of March. And that's how long that accumulation structure on the intraday needed to form to build a count. This count goes 349 to 360, and we are at 341.55, and the bigger second segmented count goes 403, 413. So there is room to go still for the triple Qs and the other indexes also. So now moving on, this is a chart we did back in December, and we used this chart at the beginning of the year, Russell 2000, because it's really a measure of the rotation that we have seen into value, in this case, small cap value in the Russell. This is 60-minute data, 3-box method, 1-point scaling. And here, this count, which is along the 151 line here, and along the low around 133, this counts up to 286,304. And as of now, 224, actually there has been a consolidation and a correction occurring in the Russell, and that may build a bigger count that will confirm the move up to those higher objectives. So we will keep a very close eye on that. But this is the rotation that we're seeing into value. Here's the S&P. This chart was done at the end of March. And so we'll get back to the historic examples here in a minute. But this chart, I just wanted to bring you up to date. This chart where the count line is at 3860. This is a chart that we have published in the Wyckoff Market Discussions. This count, similar to the triple Q count we looked at earlier, 30-minute data, 1-box reversal, 10-point scaling, counts up to 4360 to 4490. And as of the time that we published this chart, just below 4,000 at 3990. What has happened since? So here's our count, 4360, 4490. This yellow box right here represents the area that we counted. This would be considered to be a reaccumulation count. Look at how it consolidated along the lower trend line of the channel. And this currently, the price of the S&P 500 is 4162.43. Further to go. So we have further to climb for the S&P according to this intraday point and figure study. Now, here you can see something very interesting, and I'm going to show you other examples of this in a minute if we have time. and that is, look at how this has run up to the top of this channel. This channel was defined back in November to February. And so you can see this overarching supply trend line. Oversold line is dotted, and here we are crowding up against this. A question I have is, can the market accelerate out of this channel? There are a number of important indexes that are in their channels and bumping up against the top of them. So this is really an interesting place. Bitcoin is so interesting. And so here you can see a really classic reaccumulation structure right here in Bitcoin. Look at the higher lows. This is being aggressively bid up every time it attempts to correct. The corrections are shallower and it's at a higher low. So is it likely that Bitcoin could continue to have a further uptrend? Well, let's consult the point and figure charts. This was a chart that I had put up quite a while ago, and this chart shows the accumulation count for Bitcoin, really a pretty structure back 2000 back to 2018. Now, this is Grayscale Bitcoin Trust. I like to use this for point and figure analysis. It seems to be quite true, works well. So here, this count, the green box goes 59 to 67, and we touched 58 before an important correction occurred. There's a larger count, this red count here, which I have modified a little bit on the left, is 104, 113, and the count of this whole area, 179 to 213. So just to put a point on it here, there's two counts that I see. This count here is, now this is the completion of this area. This count goes 77 to 87, which is like a swing trading count. And then the larger count, which goes back to this area. So we're looking at all of this. Let me just put a box there, counts 98 to 117. And so there is the potential for higher prices. And now this is Bitcoin, Grayscale Bitcoin Trust as a proxy. So now this is that value to growth chart, and I'm just going to show this to you. This is a beautiful base that has formed in, so I've evaluated it with a Wyckoffian accumulation structure. It's got all the elements, and then a beautiful uptrend which shows value leading growth. This is a rotation, an important rotation, but since that time, there's been a reaction in the case of the Russell pulling back after having a substantial outperformance. And so it's pulled back. And so the Russell may be building a cause for another move. But right now, growth is back in the dominant position again. So as we would expect after a really big jump up and out. And so moving on, this is interest rates. And so we've talked about these before. This chart actually goes back to January 4th. And you can see distribution, redistribution, these counts were spot on. Interest rates went down to an exceptionally low level, down to 0.52 on the 10-year, building a cause. And you can see here, this cause along here is substantial. So I put the original chart so you could see when we initially looked at this in power charting, and you can see three segments. Here are the three segments with the highest yield objective being at 3%. So 0.52 at the low up to 3%. Well, here we are smack dab in the middle of the first objective range right now. And you can see this is the chart that updates that right here. And that rally goes up to this 1.754. It's backed off some. Well, classic, right? So now we're in the middle of this range, possibly, probably building a cause in the area of this congestion for a count to the next level. And I think that in a secular basis, interest rates are now in a rising trend after decades of making lower highs and lower lows. So rates are rising. Now, what is the parallel to this? And this is the 1987 market. And so you can see here, this is the current period that we just looked at on this chart on the left. Well, look at the family resemblance to the 10-year back in 1986-87. Look at that beautiful accumulation structure. During that period, the stock market is just, as measured by the S&P, is just marching ever upward as it is now. So there's a family resemblance there. Interest rates start to really take off and they go up in two waves. Here, this causes a little pause in the market. And then here, there is a climactic surge in the 10-year yield, but it goes over 10%. We're only at 1.75 here, but on a percentage basis, we are up substantially. We're going up on a percentage basis faster now than then, but we're at a very low rate in comparison. So is it possible that fast rising interest rates could have the effect of stopping the advance in the stock market? And so this is a question. There are differences today from then, but it's a cautionary tale. So now let's turn to gold. We have a couple minutes left. I'm sorry to be going so fast, but we have this beautiful accumulation structure that is formed from 2013 to 2018. We documented this at the time. I've written blogs on it. I've talked about it in power charting. Well, look where our first segmented count goes from the last point of support over here to the low. It counts up on GLD to 192.202 as an objective range. Well, look where we went, 194, and then a substantial decline since that period, which is, started in August of 2020. Now we have two higher objective ranges here, which you can see, and these are the other shaded boxes. Moving on, here is the vertical monthly chart of gold, which is the same area that we just looked at. You can see these blogs that I've written August of 18, and there's links to others. Last point of support, really beautiful rally right up to the prior highs, resistance, and the resistance causes the market to pull back. So I'm going to, let's see, I'm going to pause for a sec. Hold on, because I want to get this right. Next week, we're going to finish up a few things here, but I really want to get into rotational groups and stocks that are coming into favor and look as though they're ready to lead the way higher, and then also the ones that might be ready to take a rest, that are going to rotate out of favor. In the meantime, here is the GDX as a continuation of our prior discussion on gold. And that is, you can see here a count that formed 2020 to 2017. This count on GDX, which is the miners ETF, counts up from current level 3274, counts up to 7650.83. Here is the vertical chart of the recent decline right here. Beautiful trend channel, and look what happened today. Beautiful jump up and out of this channel. So we very well could be looking at the conclusion of the decline in the miners and the metal. And with that, I will thank you so much for being here, and we will see you next week.